The second setup I trade is a higher probability setup that I call a continuation reversal. And while it's less common than a counter trend reversal, it is even higher probability. As a reversal setup, it is similar to counter trend reversals, but there are a few key differences. The main one is that a continuation reversal is not traded against the trend. Continuation reversals are traded with the trend. So if we have a major bearish trend, a continuation reversal would be a continuation of that trend. And if we have a major bullish trend, a continuation reversal would be a continuation of that bullish trend. So let's see how they work and how their price action story breaks down, because again, I want you to have a deep understanding of every aspect of this setup. The better you understand this setup, the more likely you will be to trade it successfully. Price action trading is not about pattern recognition, it's about understanding the story of price. So what is the story behind a continuation reversal? Well, here is a strong bullish trend, and here is resistance. Now, trends are not always stopped dead in their tracks by a strong resistance area. Sometimes the strength of a trend, in this case the strength of buyers, is so strong that it smashes through resistance. But this takes a lot of strength out of buyers, a lot. Many times when a trend breaks straight through a resistance area, you see a loss of momentum and then a retrace. This retrace often takes price back to the resistance area it broke, which is now a support area. And at support it meets buyers. So let's review this story so far. We have a strong bullish trend which indicates buyers are in complete control of price. Price approaches our resistance area and slams straight through it. Who's in control of price? Buyers, obviously. After price breaks resistance, we see continued buyer strength for a few candles. Then we see this candle, the long upper wick, the small body. They indicate that buyers rapidly lost strength. Sellers were unable to move much lower than open, so they are not in control either. The second half of this candle shows us a lot of seller strength though, because they were able to pull buyers down from all the way up here. All in all, this is indecision, so who's in control of price? Well, it's undecided. We then see these two smaller indecision candles with small bodies, small wicks. The candles continue to indicate indecision. We are seeing a tight struggle between buyers and sellers. Then we see this candle. It's not a huge bearish candle, but the upper wick is tiny, and it makes a new low beyond the low of the last two candles. So who's in control of price? Well, I wouldn't say sellers are in complete control, but they are starting to take control. We see that by the lower low and the fact that price didn't really move up almost at all in this candle. The next candle is a bigger bearish candle though, and it's clear that sellers have taken control of price. With that, they push price down to what is now support into this buy area. Alright, so that's the story so far. But now we see indecision forming. Long lower wick, small upper wick, small body. We can see that sellers tried to continue down, but buyers in this area pulled them back up. That being said, buyers were unable to gain much ground to the bullish side themselves. So who is in control of price here? Well, it's undecided. This is still indecision. But this is where you would start planning to enter a reversal. If price breaks the high of this indecision candle, you can enter a trade here with a stop loss here and a target around here. Like I said, I'm going to cover stops, targets, and entries in depth later. For now, I just want you to understand this setup and how it works. So let's review this setup. We start with a strong bullish trend. Who was in control of price? Buyers. The trend smashed straight through resistance but stalled shortly after. We then get these candles here. These candles are clearly indecision, so neither buyers nor sellers are in control. Then come these candles. Together, they make up a strong bearish move down. Who's in control of price? Sellers are in control. This small little trend here is the preceding trend of this reversal. Price falls back into support, and we see this candle form. Long lower wick, small body, clear indecision. Who's in control of price? It's undecided. Then we see this candle start to push up and makes a new high which triggers our entry. What does a higher high mean? Well, it means that buyers are in control of price. It's in a buyer's nature to make a higher high. It suggests buyers are strong. A higher high forming on support right after indecision suggests that buyers have taken control of price. This is a high probability trade setup, and it's being traded with the major trend, which makes it even stronger. So buyers took control of price, pushed up our target. This was a nice little successful continuation reversal trade. A short continuation reversal trade would look like this. The bearish trend breaks below support, comes back up to support, forms indecision, and then continues down. Now that you know the story behind continuation reversal trades, let's look at the final type of reversal trade that I take.